I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had a rough time last week as investors faced the reality that rates are climbing and worldwide supply chain disruptions are bringing shrinking supplies to many goods. Especially the area in China and Europe, they have very significant energy disruptions, climbing prices going on, slowing economies, and high stock valuations, of course, all around the world. As a matter of fact, the inflation rate that we see coming out of Germany this morning is the highest in 30 years. This has them hanging over a cliff, something that, well, maybe they haven't understood for quite some period of time, as they look down and realize that, well, they really don't have any safety belt any longer. We saw early in the week a rotation going on as the stocks jumped in both directions as the 10-year yields moved up to 1.55%. Energy moved up sharply. Natural gas on Monday at one point was up 8%, huge gain. And also on Monday, we saw the Russell pick up 1%. At the same time, the Nasdaq declined 1.7%, and we think that's only the beginning, as lots of declines yet to come in the Nasdaq. And that was a follow-through that we saw on Tuesday in the Nasdaq as it fell 430 points. That was the biggest decline since the pandemic. Then, throughout the week, more selling came, especially in the growth stocks and those leaders as interest rates, they really moved up significantly. The market is getting scared by that. Yellen and Powell, they testified before Congress on the COVID-19 response, and Yellen warned of a catastrophe if the debt ceiling was not raised because they wanted to pay their old bills. Well, it turns out that they did kick that can down the road to the 3rd of December, funding the government to that time. But personally, I'm sick of hearing this from these kleptocrats that are stealing the future to cover their mistakes. The debt ceiling, that was created in 1917 so that during World War II, the president would have money available to fight the war. That's without going to Congress, but with a limit. They put a limit on there of a deficit of $11.5 billion. Imagine where we come from that. What that meant is that amount could be spent to determine in advance how much money that the president could use to fight the war. We live in a bizarro backward world right now where our brilliant Congress people write bills and then pass them without knowing how it will end up, where that money will come from. The Treasury, the FOMC, and central banks around the world, they team up to monetize and to steal from the seniors and savers, which they have now been doing for some 13 years, killing them. That kills the middle class, kills the seniors because they've saved money and can't get any earnings on it. And then, of course, we have this massive inequality that goes on because all of that money gets pushed way up into the upper class through these rising asset prices. It's an absolute travesty. And then what happens, of course, is that massive debt bomb that they put in there just absolutely will explode based on this stupid scenario. It's now so huge that they must keep 0% interest rates. They're just desperate not to raise the rates up. And what you get is inflation that we see now, and it's kind of forcing rates to move on the upside. That brings a potential big bust, and we already have massive dislocations going on. You see, the way that they handled all of this, there's no way that anything could happen organically, where the economy can figure out what things can happen and what things can't happen based on market conditions, based on where we are in the world in all aspects of the supply and demand situation. This big disruptions going on in the supply chain. I mean, a lot of it is related to COVID, but tons of it is related to how these central banks have handled this situation. Investors are seeing it, feeling it, as the underpinnings of the stock market crumble. Many stocks are already down 20, 30, 40%. For example, in the airline area, American Airlines, JetBlue, they're both down about 26%, FedEx about 20%. In retail, Gap is down 36%, and Nordstrom 41%. These are just crushers. In the home building section, KB Home, Pulte Home, both over 20% on the downside. And you know those stay-at-home stocks, the ones that exploded to valuations that we criticized so strongly as that was going on a year ago, stocks like Zoom and Peloton, well, they're more than cut in half on the downside. So all of these stocks that people just rushed into because of everything the Fed was doing and all of these disruptions, well, they're getting absolutely creamed. Mega caps, well, they've held the indexes up, and that is especially till now. As rates move up, the techs are under pressure, and we see many of these market leaders with breakdowns. And I'm going to show you that on the short-term view. So we've had this masking going on of the indexes, but now the mask is off. A big decline in market participants and analysts has caught them by surprise. Many of them have never, ever seen a bear market. Most of them, or a lot of them, were in college or even high school when they even gave a thought to trading and that the potential for a bear market was out there. I have no idea who you are, they're saying right now, as the bear is now waking up from its long hibernation. I think the Fed, they've lost control. You know, they had all this control and they moved markets up, but that's over. And Fed cred is certainly in question, maybe gone, and I sure hope so. At least people are starting to see the truth as you see all of this going on in the news, where there is lots of criticism, and you see Yellen coming on and making statements that are absolutely incredibly absurd. She, the queen of MMT, what a great fit for this economy right now, and the destruction that will happen based out of her policies and this Fed and well, I don't want to get too far into the political discussion, but you can hear that it has pissed me off. Well, that bear market that I have said would start this year, I think it's here. And in a few minutes, I'll show you why. For the week here at midday, the S&P 500 down about 3.5%. We saw the worst month in September we've seen since pandemic time. The Nasdaq down about 5%. Russell still doing better, but it did reverse, down about 2.5%. And the Dow down about 3% now on the week, as Merck, which has this new pill, and that is helping the Dow today move to the upside, which is a COVID pill, which they have said now that through their testing has reduced the hospitalizations and deaths by 50%. So that is very, very significant. Now, this pill, I guess, that you take after you have been confirmed that you have COVID. So that, of course, is some very good news. The bond market yields moving up, and that has hurt stocks. The 30-year up down about a point, as the 10-year yields move up about 6 basis points. Now, 2-year yields moved up about 2 basis points. So you have a steepening of the yield curve going on this week, but the banks are not acting great. And I actually think that based on some of the things we're looking at, especially Goldman Sachs, Morgan Stanley, those patterns are not pretty at all, and they are giving us some sign that the financials are topping. Gold market, well, gold's up about $9 on the week. And silver had a big rebound Friday. It's up now about 7-8 cents on the week on this good rebound on Friday. But overall, these metals have not been in great shape. And if you followed our longer-term analysis, we think that they are going to continue to struggle. The dollar, on the other hand, we're bullish on, at least for several months. And we're looking at an 0.8% increase this week as the safety bid came in. Now, based on that, the metals didn't do all that badly because usually they trade inversely. Oil market, well, 6 weeks in a row to the upside for light crude, up about $1.15 on the week. And if you watched our Future Speak show, you'll know that we believe that it should stall right now. We think it's going to go through a digestion period before moving up to higher levels. Coming up in this show, I'm going to show you 2 opportunities that you'll be able to get our content and teachings free. Pretty good stuff. Arvi is going to give an amazing cycle analysis lesson while he analyzes the German DAX in our international market preview. You're going to love that segment that he has in there. And I am going to show you the Nasdaq in a short-term view. And I'm even going to show you 4 stocks, 4 of these leaders that have given key breakdowns and are giving warnings in this market. I want to remind you to please go to askSlim.com and explore that site. You can become a free member, of course. And if you're watching this on YouTube, please do subscribe to our channel. Click the notification bell so you know when we put up videos. And like this video. Give us a thumbs up because, of course, that does help us. If you use Twitter, follow us at askSlim. For membership info, questions, and anything on these offerings that we have for education and analysis and what I'm going to be showing you right now, please do write to Matt at askSlim.com. I want to tell you right now something really important. This is a great event that is coming up. This is the Wealth 365 Summit. If you're an active trader, or you trade stock indexes or the futures markets, this is really a great presentation that I'm going to be giving here in October. I'm going to be presenting on greater success for day traders using multiple time frame analysis. And I'm going to show you how to use momentum conditions and ways to really improve your profitability. So many short-term traders struggle with that because their losses are bigger than their winners, and they have more losing trades than winning trades. Some of them even have a decent number of winning trades, but because their losses are so big relative to winners, they're not getting profits. And I'm going to show you how you can benefit greatly from these studies and multiple time frame analysis and really turn that around. This Wealth 365 Summit is fantastic. There's going to be over 50 speakers in 6 days. It starts on October 11th, and all those top name people that you know, you love to hear and you respect, well, so many of them are going to be speaking along with me. I'm going to be speaking Tuesday, and that's my event, October 12th at 11 a.m. Eastern Time. You can, if you're watching this on YouTube or on social media, we're going to be posting a free sign-up link for you to use to sign up to participate and to see my presentation on October 12th. And if you're an askSlim member, we've already emailed you a link, that link, and please do use that, and I'll send it out again just to remind you. So special, great event, free event, and I think that you're rarely going to have an opportunity to learn this much from so many people, including me. All right, we're going to show you now a preview of the international markets. This is just great work by Arvi. He's going to give you basically a cycle analysis lesson looking at the German DAX. This is a preview of our international market stock sectors video that our members get, and you need to see the full video with all 11 countries that he does the analysis on. You need to become a level 2, 3, or 4 member.
So this is what we have for the German DAX. We have added in these minor thirds, and these are fairly clear here. So let's take a look at the cycles here in the German DAX. We have a dominant weekly, which is broken up into these minor thirds. We have traced out how the dominant cycles have formed over time, as you can see right here. And now let's go ahead and look at the minor thirds. So you can see the 2 cycles pushing up here, had the rally, pull back right here to form the first minor cycle low. Then we got the rally off the minor cycle low. And then we had one more pullback here for that next minor cycle low, then the rally off that minor cycle low. And then we got late in this dominant cycle, had one dip right there where we had the dominant cycle pushing down as well as the minor, and then that formed that key low. Moving forward, 2 cycles pushing up, got the rally, had a pullback right here into the minor cycle low, got the rally off the minor cycle low, had the pullback right here into the next minor cycle low, so you can see how clear this really is. And look what's happening. We had a little bit of a rally that already looks like it's failing. So what is this telling us? Given that we have negative weekly momentum here, as you can see, that says that this dominant cycle is starting to push down on the downside. Our next key dominant low is due very close to the end of the year. So likely this rising phase on the minor is already over with, and we are in a risky time period with the minor cycle pushing down as well as the dominant cycle pushing down. On the downside, we have a key weekly low here at 14,816. If that were to break, our next level down is a major 38.2 at 14,266. If we go ahead and shift over to the daily chart, you can see the daily cycle analysis right here. And you can see these patterns are really quite clear, right? We have a dominant daily broken up into the minor halves. And you can see the rising phase here with 2 cycles pushing up, the pullback here to form the mid-cycle low, the rally off the mid-cycle low, and then the pullback to complete that dominant cycle. Moving forward, 2 cycles pushing up, the rally, the pullback here to form the mid-cycle low, the weak rally, and then the sharp failure here with the dominant cycle pushing down as well as the minor. Now note that that low that just formed here was 15,019, and that prior low was 15,048. That says that this daily cycle structure, which has been positive this whole way, giving us no reasons to be negative, is now giving us a reason to look for a more bearish outlook, because we have a lower low relative to the prior low and a lower high now relative to the prior high. So what we look for under this overall condition is for this rising phase to fail and get into a corrective period. Now, if I move forward here, the next key daily low is due out in the end of November. So this is a really risky time period for the German DAX. You can see a very weak rally that failed in the 61.8 to the 78.6 zone and has already turned over. So we are seeing some signs of failure. We are watching for a move through the short-term 78.6 at 15,172. If that were to happen, we have a cluster of lows right around this 15,020 level, and then below that we have a short-term 78.6 at 14,929 and a short-term 100 at 14,703. So those are our downside references here in the German DAX. We are looking at this as having formed an early high, and for this to enter into a corrective period on that dominant daily cycle here in the German DAX.
Absolutely great work there. Remember, you can take our cycle analysis workshop that we offer. Go to the cycle analysis workshop special page that we have on the website and look it over, but don't buy it, because next week we're going to be offering a special, which we do about once or twice a year, that is fantastic, and you're going to be able to get that special video, set of videos, 20 video modules where you'll be able to learn cycle analysis. So just absolutely fantastic work by Arvi, who is truly an expert in this style of analysis. All right, we're going to give you the short-term view on the stock market coming up, but first, This is a special announcement. The askSlim Premium Service Preview is now starting. This is a free 7-day trial. You don't need a credit card at all. This is the one time a year when we let people take a peek at many of the popular services that we have at no cost. What you're going to get is the Stock Index Report Daily Snapshot. This is just an amazing, comprehensive, basically a newsletter that comes out every single day, which has all of our great important analysis on there, all of the key numbers. You're going to get the Stock Index Report Daily live chart stream. This is where you get to see the short-term intraday on the S&P 500, the Nasdaq, and the Russell with our very key levels for each day with acceleration zones, and our reversal scout, which keeps you on the right side of the market and helps you see which one of those indexes you want to be long or short if you're a pair trader. The S&P 500 live multi-time frame chart stream. We broadcast this all day long, and you're going to be able to see that with our proprietary indicators on there. You're going to see our daily trade ideas. Wow, we don't share this all of the time. In fact, almost never. And you're going to get a great idea, including a video every single day on how these trade ideas are developed and how we do our trade planning. You're going to get Future Speak, where I go through 26 different futures, contracts, and indexes and do very deep analysis and really teach around it every single Wednesday. You're going to get our Slimulator. That's our ranking systems, where you get our bull-bear conditions on the 84 best traded symbols that there are. This is just an amazing app that you'll be able to get into. And our Slimulator Momentum Tracker for position traders, longer-term holders, investors, where you get to see our proprietary momentum conditions based on our own algorithms, and also our directional decisions that we would make based on that, and conditions that you're going to be able to see. You can sign up for that at askSlim.com. Go to the top of the main page and you'll see a sign up. Now, I want to remind our members, level 1, 2, and level free 1 and 2, if you're going to be able to see things that are not included in your memberships, of course, and they won't be automatic for you. So you actually need to sign up for this preview, and you can do that again at the top of the askSlim.com website, or write to Matt at askSlim.com, and he will send you that special link in order to sign up for our PSP, Premium Service Preview, 7-day trial, all this stuff right here, no credit card required at all. So please do sign up for this, and you're going to be just loving what we share with you. That's our Premium Service Preview 7-day free trial. All right, we're going to do our stock market look, and we're going to look at the Nasdaq 1 to 3 week view. And I'm giving you a warning in here that there are breakdowns. Last week we talked about that there were some deteriorating conditions in here, and that it was looking like there would be a potential breakdown. We gave you the reevaluation levels, we gave you the breakdown levels, all of those things, and they all broke. For the S&P 500 and the Nasdaq, despite the fact that there's a rebound here on Friday that we don't even know is going to be able to hold up, because we saw big selling come in on Thursday in the final hour. And of course, final hour selling is very different than we've seen over this last year and a half. So the tone has changed, the market has changed, and very significant things are happening right now that aren't good. Let's take a look here. This is the QQQ. This is what we're going to do our analysis on for this week, the Nasdaq, looking at this ETF. So this is just nothing on here, right? We do have our the volume on the bottom, and we have the slim ribbon PO and the slim ribbon on the top. What I'm going to show you right now is that the slim ribbon right over here is one of the best momentum indicators you will ever see. When it is green, and this is green on the bottom in the slim ribbon PO, it's positive. When you get these up arrows, it shows you resumptions of positive conditions. Sometimes when you correct, it will turn neutral blue, but then it will turn green again, as you see, giving that signal right there. What happened was is you got a little bit of a whipsaw here as the market turned neutral, and right in here it turned negative. This is where it turned negative right there, which was fair warning that the momentum conditions were getting bad. And here you could see right here, it continued to warn of resumptions, and the widening of the slim ribbon is a sign of momentum in that direction increasing, just as it did right over here in a positive way. And all positive, it's now doing it that way, negative and all negative right there. And now what I'm going to do is bring in the analysis, the cycle analysis, and now all of a sudden this chart lights up with information that I'm going to show you about. So we have cycle analysis in here. These are the cycle brackets. This is a drawing tool that shows you the rhythm in the market. This is money flow. This is a visual way to see money flow. When cycles are configured bullishly, and you can see we have these green arrows in here showing you, that's when each of the highs is higher and each of the lows is lower in the cycle. And you have this upward directional component, which is essentially positive money flows, positive momentum going through this period. Once the decline comes down and starts to test the previous low, even though this is positive, you get a warning. Now, I want you to note that this good positive structure followed by a structure that was losing strength, followed by the structure that topped very early in this cycle, giving you what we call left-hand translation, that's actually what forms head and shoulders tops. Head and shoulders tops and bottoms are formed by cycle rhythms, and you see that in here. You can learn that in our cycle analysis workshop at askSlim.com, which we have a special starting next week. So you can see in here, this is where it turned negative. Now, this is really what is key right now. And I'm going to get a little closer look as we look at these cycles that are coming up right in here. Let me just zoom this in a little bit more for you to see. So here is where that cycle peaked and turned down and broke the previous low. It also broke that neckline, you can see. So now what we have is cycle configuration that is negative. And the directional component shown in here by this channel is now pointing to the downside. That keeps all rallies from getting through resistance levels and will keep pressure on the market. So these cycle rhythms, which are now averaging about 20 days between each low, tell us that this decline that we're in is going to come till mid-October, around somewhere between the maybe 11th and 15th of October. And we have a target zone that is formulated off of the fib extensions that come off of this last cycle, which says it's likely to hit 355 on the QQQ, down to potentially 350 in this cycle. So that says all of the rally attempts in here are likely to fail and to keep coming down. And because of the negative configuration right in here, it is likely that the next cycle will rally and fail in a resistance zone that will develop in here and then go to lower lows. We are projecting that down to that intermediate 23.6% fib extension as this negative directional component moves the market to the downside, and that comes in right around 330 on the downside in the QQQ. So this is our 3-week, basically 1 to 3 week projection, almost 4 weeks, that the market will flounder right in here, try to rally and keep failing, maybe get a better rally in here, and then move down again with this low here projected out to around November 10th. Plus or minus right in here. These breakdowns are very significant when you get these, and you get these translations that peak early, which tell you major selling is in the market, and when you get these breakdowns which show you that the overall configuration of the market is negative. So that's, a look at the Nasdaq. It is clearly negative when you look at this with a lot of risk. I want to show you 4 key stocks that are in this tech category that have very similar things going on. Let's look at NVIDIA. NVDA, which of course was a stock that did super well based on their cryptocurrency, the cryptocurrency markets, and their chips Here you could see the cycle analysis, and here it's going from neutral to positive for a long period of time. Momentum now turns negative, and the breakdown right over here, which points to a decline, yes, out into the middle of November, just like I showed you in the looking at the QQQ. So that's NVIDIA. Let's take a look at Facebook right here. Facebook, same thing. It is broken down right there. You might get some rallies in here, but look at the negative momentum, first time in all of this time frame in here. That giving you a condition that is suggestive that this will decline into the middle of November. You could see what we call the principle of synchronicity at work, where products are likely to bottom at similar times or at the same time. Take a look at Square right in here, which has done super well. This first low due, yes, middle of October, as you see right over there, and then the next low, middle of November. This has a breakdown, likely to be coming down to this area of fib extension around 230 or there in this next wave, in this next week and a half. That is a look at Square. And let's just take a look at Microsoft, which has a different pattern, but still negative, as we get this cycle right in here, which bottomed right at that point, and all of these positive conditions and all of these bullish signals that you see right in here for Microsoft. It now breaks that key low and momentum turning negative, as you could see right there. We're expecting a rally, but that rally to fail, and then when that rally fails, we'll have a resistance zone in just the next few days for our members, and then it is likely to be moving down again through that period right over there, and this low out over here towards the end of October. So it's a slightly different pattern for Microsoft, but still negative as it turns the corner here on the downside and momentum gets extremely negative. That is a great look at 4 very key stocks that are in this tech category, tech streaming, just a really bad condition. Let's go back to that QQQ really quickly for you to see it one more time. There is that analysis that is just screaming at you. Please do become an askSlim premium member so that you can learn so much about this. Look for our cycle analysis workshop special, which is coming next week. These are negative conditions and warnings. The probability of a declining market is very significant relative to this market saving itself and moving up sharply. That could always happen, but we sure doubt it. And I would say the risk rewards are 4-to-1 or greater on the downside based on everything that we see in here. Negative directional component, negative money flows, negative momentum, breakdowns, head and shoulders top, all of this really giving you a sense that there is trouble out there. For full analysis, seeing our weekly and daily on on the Nasdaq, the S&P 500, the Russell, the VIX, 22 other futures contracts. Please do watch Future Speak on Wednesday. If you become a PSP member, that's our popular services preview that we're running this week that I talked about earlier in the show. You must sign up for that at the top of the website. You'll be able to see Future Speak for this week at no cost to you, no credit card. So please do sign up for our PSP. That is a look at the QQQ at the short-term view, which is not pretty, as you can see when you look at that. That is the wrap up. I want you to be so unbelievably careful because it is so crazy out there. And I'm always wishing you great trading.